Let me ask you about the oil sector, your exposure to it. What are you expecting in terms of oil prices? What assumptions are you making about when we get a meaningful increase in oil prices?
Well, so far this year, the markets have been extraordinary in basically all aspects. And in Aker, we expect that it will take some years before the oil market is back in balance. So we're preparing our portfolio companies for high volatility and a low oil price for the next couple of years, and hence it's our strategy and ambition to produce oil and gas at the lowest cost possible, because that's the best way to prepare the companies for the said volatility and low oil price scenario.
Are we going to see a structural shift to a lower oil price environment, though, even beyond the next 2 years, Oyvind? I know there are limits to how much we can foresee the future, but sure, we see weak prices in the short term, but even out into the medium and long term, are we looking at much lower oil prices, do you think?
Well, I'm reluctant to speculate in the longer-term oil price outlook because experience tells that it's very hard to predict. It's also a risk that we're about to accumulate a longer-term different imbalance, because oil companies have now stopped investing in new capacity, and if demand comes back, it could also be a challenge longer term to produce the oil and gas the world will demand. But we're not making a bet on that. We're rather assuming, for the purpose of our strategy and planning, that there will be a structural shift and that we should be able to run profitable and good operations also in low oil price scenario longer term, and hence what I just said, the importance of cutting costs and enhancing efficiency.
And Oyvind, you have a sizable stake, 40% in Aker BP. We saw the dividend being cut there. Do you think there's a chance that the dividend will have to be cut further at Aker BP?
Well, the board of Aker BP will consider and decide upon dividend payment quarterly. So we reduced dividend for the second quarter by 2/3, and the management guided to the effect that the nominal level paid in the second quarter will be the point of departure for the board's assessment in the quarters to come. But the board will obviously also take into account the market volatility and the market outlook. But the guiding is, as I said, to pay 1/3 of the original policy.
Given what you've said about the future of oil prices, Oyvind, and the uncertainty there, I know that in the last oil downturn, your business used the opportunity to build up Aker BP, to do some mergers and acquisitions. Do you see similar opportunities out there right now, assets that look attractively cheap?
Well, I think it's too early. Also, the M&A market has more or less stopped. So I think it's a wait-and-see modus in most organizations for the time being. But going forward, our expectation is that consolidations will happen both in the exploration and production industry segment and in the oil service industry. And it's core business at Aker to explore also transaction opportunities in order to turn this crisis into an opportunity.
Just briefly, can I ask you about your lobbying of the Norwegian government? They want to make changes to the petroleum taxes. Are they listening to the industry? I know you and others in the industry have been calling for change. Any sign the government is listening to you?
Yes, definitely. We have had a lot of contact with the Norwegian government and also the opposition in Parliament. And most political parties in Norway acknowledge the need for initiatives to stimulate new activity in the Norwegian oil and gas industry in general and the Norwegian oil service industry in particular. So the discussion is more about what kind of changes to the petroleum tax regime in Norway will be most efficient in order to stimulate new investments and more activity. So I'm hopeful that we will be able to conclude a stimulus package during the course of May or June this year in order to facilitate more activity.